So in our yesterday's session, what we did was we went through the basics of the mergers and acquisition. We talked about the concepts of mergers and acquisition. We discussed that what is merger, what is acquisition, why does an entity go for the acquisition? Because if the entity wants to grow, it has got to go for the acquisition. Then what we did was we talked about the concept of the different types of acquisitions like vertical, diversified, and the horizontal, etc., etc. The different types of integrations that could happen and that could take place. Then what we did was we moved a bit forward and we actually started discussing about the different type of valuation methods. So amongst the different valuation methods, we talked about the asset based, we talked about income based, we talked about the cash flow based valuations. These were the different methods that we talked about. And then what we did was we ended our class and I told you people that I will be having another class in which I'll be going through the examination questions on the mergers and acquisitions. So what I have done is I have highlighted many questions on the mergers and acquisition. And I think that it's time now that we should go ahead with these multiple questions on the mergers and acquisitions. There are questions which would cover up the income base. There are questions which would cover up the asset based technique. There are questions which would cover up the cash flow based technique. So we have got different questions which are actually going to be covering up different techniques. So let's just start off. The first thing that we will be discussing is that I have actually shared these questions with you people also. And when I have actually shared these questions with you, then the WhatsApp group that I have shared. The first question that we shall be going through, the name of this question is Sigra Company. The name of this question is Sigra Company. And if I talk about the Sigra Company question, the requirement to this question is that there are multiple requirements. One of them is it says estimate the percentage gain on a Dentro company share under each of the above three payment methods and comment on your answers obtained. So Sigra Company is acquiring a Dentro company. So what the examiner is asking you is that he's asking you to calculate the percentage gain on each of the Dentro company shares that we acquire. So let's go through the question and I'm going to start discussing in 2-3 minutes time. Okay, so let's just start discussing. It says Sigra Company is a listed company producing. Sigra Company is a listed company which is producing confectionery products which it sells around the world. It wants to acquire Dentro Company, an unlisted company producing high quality luxury chocolates. Sigra proposes to pay for the acquisition using one of the following three methods. So what is the Sigra company planning to do? It is actually planning that it is going to acquire the Dentro company by making payments using either of these three methods, which is number one method, a cash offer of $5 per Dentro company share. The first one of them is going to be $5 per Dentro company share. So for every Dentro company share that you are going to acquire, you will pay $5. Or the method number two, an offer of 3 of its shares for 2 of Dentro company share. So basically 3 for 2 share exchange. And the third one of them is an offer of 2% coupon bond in exchange for 16 Dentro shares. The bond will be redeemed in 3 years at par value. So now it says extract from the latest financial statements of both companies are as follows. For the Sigra company, for the Dentro company, the sales revenue, profit before tax, taxation, etc., etc., etc. It says the Sigra's current share price is 3.6 per share. So this is what the market value of the share is. And it is estimated that Dentro company's price to earning ratio is 12.5% higher than Sigra company's current price to earning ratio. So what is it? It actually tells you the market value of Sigra company's share right now and the price earning ratio of the Dentro company, which is 12% higher than, which is 112.5% of Sigra company's P ratio. It says Sigra's non-current liabilities include a 6% bond, which is redeemable in 3 years' time at par, which is currently trading at 104. So the market value of the bond is also available for $100 par value. It says Sigra estimates it could achieve synergy savings of 30% of Dentro's estimated equity value. So whatever the equity value of Dentro, you can achieve 30% savings by eliminating duplicated administrative functions, selling excess non-current assets, and thereby reducing the workforce number if the acquisition were successful. What are we required to do? We're required to calculate the percentage gain on Dentro company share under each of the three payment methods. Comment on the answers obtained. So if I say that I'm required to compute the percentage gain on a Dentro company share under each of the above three payment methods, what am I actually going to do? So the question's name is Sigra Company. I repeat, the question's name is Sigra Company. First of all, let's try to understand that the first offer is the cash offer. If you have to establish the gain or loss, so what do you need to do? You need to know that what is the value, like the cash paid. We do know that the cash paid per share is what? The cash paid per share is $5. So the cash paid is $5. And at the same time, the value of Dentro company's share. The value of Dentro company's share is going to be a question mark. So resultingly, there's going to be a gain or a loss. There's going to be a gain or a loss. Now, so what do we need to do? We need to actually establish the value of this Dentro company's share. I repeat, what do we need to do? We need to establish the value of Dentro company's share. How would we establish the value of Dentro company's share? So we are being told one thing, which is the P ratio method is being given. So how would you do that? Let's try to understand. First of all, we need to establish the P ratio. First of all, we need to establish the P ratio of Sigra company. So P ratio of Sigra company needs to be established first. The formula for the PE ratio is your share price divided by EPS. We have the share price of Sigra company, which is $3.6, but we don't have the EPS available. So if I need to calculate the EPS of Sigra company, I do have the profit after tax available, and I need to calculate the number of shares. So the profit after tax of Sigra company, I hope that I'm not very fast. I hope that I'm not very fast and you people are able to catch me. Okay, so now what actually happens is when we talk about the profit after tax, the profit after tax is what? 4950. What is it? It's 4950. When you divide it by number of shares, the number of shares of the Sigra company is 4400 is the capital and 40 cent is the per share price. So 4400 divided by 0.4. So resultingly, if I try to establish the EPS, if I try to establish the EPS of Sigra company, what am I going to do? What is it going to be? Point 0.45. 0.45 is what? It's the EPS, right? 0.45 is the EPS. So when you've got 0.45 as the EPS, so what is it actually going to be? You would have this 3.6. What? You will have this 3.6. And this 3.6 is going to be divided by 0.45. what? It's going to be divided by 0.45. Resultingly, the P ratio is going to be 8 times. Resultingly, the P ratio is going to be 8 times. So first of all, you need to understand this thing, that what exactly is this PE ratio? The PE ratio is going to be what? 8 times. I repeat, the PE ratio is what? 8 times. Now let's move a bit forward and discuss further. If I talk about the PE ratio, I repeat, if I talk about the PE ratio of Dentro, so the P ratio of Dentro is going to be 8 multiplied by what? P ratio of Dentro is going to be 8 multiplied by, it's going to be 8 multiplied by 112.5. So hence resultingly what happens is, this is going to be 8 into 1.125. And hence it's going to be 9 times. It's going to be what? 9 times. Now, what you could do is that you can use this P ratio for the estimation of Dentro company's value. So if I need to estimate the Dentro's share price, how would I estimate the Dentro's share price? I would simply say this thing. I would say that the P ratio, because you see, you would remember this formula, that there are two formula for the P ratio. One of them is going to be the share price divided by EPS. The other one of them could be the market value divided by PAT. But what I am going to do is that I'm going to rearrange this formula and I'm going to say share price is equivalent to the price earning ratio multiplied by the EPS. The share price is going to be what? Price earning ratio multiplied by the EPS. So what is this price earning ratio going to be? The price earning ratio is going to be 9 times. Multiply by the EPS. EPS of what? EPS of Dentro. When I talk about the Dentro's EPS, how am I going to get it? It's simply going to be like this. The earnings per share, the profit after tax is 625. The number of shares are going to be what? 500 divided by 0.4 gives you 1250. So it's actually going to be 625 divided by 1250. And hence what actually happens is, what do we get? 625 divided by 1250. 625 divided by 1250 gives you 0.5, multiply by 9 gives you $4.5. What does it give you? It gives you $4.5, and that is going to be the value of the Dentro company's shares. So up till now, what have we done with respect to this question? We have actually discussed about how the Dentro company's share price is going to be examined. So the first one of them is the cash offer, which was like the cash paid is $5. And we were supposed to estimate the gain or loss. So the value of the Dentro company's share price was $4.5. Resultingly, you would have a gain of $0.5. I repeat, what are you going to have? You will have a gain of $0.5. And on the basis of this gain of $0.5, what are you going to get? It's going to be $0.5 divided by $4.5. Because you see, what does it tell you? What is it asking us to calculate? It is asking us to calculate the percentage gain on a Dentro company share under each of the above three payment methods. The percentage gain under the Dentro company share for each of the three payment methods is going to be 0.5 divided by 4.5 gives you 11.11%. How much does it give you? 11.11%. Okay, let's move a bit forward. So whatever I calculated, I've calculated the gain on a Dendro company's share under the payment method 1. Now let's move a bit forward and let's talk about the payment method 2. I repeat, let's talk about the payment method 2. So when I talk about the payment method 2, what is the payment method 2 going to be? Let's try to understand this thing. The payment method 2 is that you need to have an offer of 3 of its share for 2 of Dendro company's share. You need to have 3 of your shares for every 2 of the Dendro company's share. Now, actually what happens is when we talk about this method 2, there is something that you need to understand. There is something that you need to understand. This is Sigra company. This is Dendro company. I repeat, this is Sigra company. This is Dendro company. So when we talk about this Sigra company and the Dendro company, there are a few things that you need to understand with respect to it. And what exactly are they? First of all, basically, this Dendro company is now going to end and it is going to be merged into Sigra company. It is going to merge into Sigra company. So this Sigra and Dendro company is going to become a single company. Now, ideally what happens is these Dendro companies shareholders, what they are getting is they are getting a share of Sigra. And what is going to be the value of this Sigra share? The value of this Sigra share is going to be the value of Sigra itself. It's going to be the value of the synergy that it is going to get, and less, this value of the Sigra company is going to be whatever the Sigra is plus the combined value of Dendro plus the synergy. This is what the whole business is going to be. So the value of each of the Sigra's shares is going to be Sigra's own share plus Dendro's share plus the synergy. So how do we calculate it? We're going to do it this way. Now, method 2. The consideration offered is going to be 3 shares for every 2 shares. 3 shares at the rate of, what is your share price? We don't know. We are going to calculate the revised share price. Now, value of Dendro shares. Value of Dendro shares is going to be 2 shares at the rate of 4.5 each. So the $9 worth of Dendro company shares are actually being acquired, and against that you're paying that consideration. So $9 of $9 worth of Dendro company's share is being acquired, and this is what you're getting. Now let's just see. So what happens is, let's try to understand. When we are going to acquire this company, that the Dendro company would now not exist anymore. So the number of shares, the value of Sigra, or you could say the number of shares after acquisition is what? Number of Sigra shares which were already in issue. The number of Sigra shares which were already in issue. And that was what? It was 4400 divided by 0.4. It was 4400 divided by 0.4. So when it is actually 4400 divided by 0.4, 4400 divided by 0.4, it's going to be 11,000 shares. What is it going to be? It's going to be 11,000 shares. Now, number of new shares issued. Number of new shares issued is going to be what? Number of new shares issued is going to be, you had the number of Dentro company share, they were 1250. For every 2 share, we are issuing our own 3 shares. So it's going to be 1875 shares. So there is actually going to be 12,875. There's actually going to be 12,875 the number of shares. Now, what is going to be considered as the value per share? So let's try to understand this. The PAT of Sigra. The PAT of Sigra is what? 4950. Then you add up synergy saving, which is going to be 30% of the Dendro's value. How much was the Dendro's value? Dendro's value was $4.5 per share, and the number of shares was 1250. So it's actually going to be 1688. Resultingly, this is going to be 6638. What is it going to be? 6638. Now, if it is actually going to be 6638, this is the PAT, and the EPS is going to be what? So it's going to be 0.5155. And the value of the Sigra company's share is going to be what? 0.5155 into 8 times, because that's what the P ratio was. So you can estimate the value of the share to be 4.124. You can estimate the value of the share to be 4.124. Kindly review this so that we can move forward. Okay. So let me come back to it again. Now, there are few assumptions that you need to use, and on the basis of the assumptions you need to go about. What did I do? I said that what are the number of shares that Sigra has? 11,000. What are the number of shares that are going to be issued? This much. What is the existing PAT? This much. What is going to be the synergy impact? This much. This is the revised PAT. What is the EPS going to be? 6638 divided by these number of shares. So you end up getting this EPS. I'm assuming that the P ratio of Sigra remains the same as 8 times. So this multiplied by 8 times, you end up getting 4.124. This multiplied by 8 times, you end up getting 4.124. And if you try to calculate the gain on the basis of this is actually going to be what? 4.124. So resultingly, what happens is it's going to be 3 shares into 4.124. So hence 12.374 less 9 gives you 3.374. Gives you how much? 3.374. Now, if it gives you 3.374, what is going to be the case? The gain in terms of percentage is going to be 3.374 divided by 9. So resultingly, it's going to be 37.48%. That is what it is going to be. I repeat, it's going to be 37.48%. How much is it going to be? 37.48%. Okay, so we have got it now. So this was method number 2. This was method number 2. Now let's move a bit forward and discuss further. Now let's talk about the third method. I repeat, let's talk about the third method, which is that if there is a third method that needs to be adopted, what is that going to be? It says an offer of 2%, 2% coupon bond in exchange for 16 Dentro shares. The bond will be redeemed in 3 years at a par value of 100. So what do we need to do? The method number 3. The method number 3, there is going to be a market value of bond that has been issued. The market value of the bond that has been issued. And what you would deduct out of it is less the market value of 16 Dentro shares. So it's actually going to be what? 16 multiplied by. What is it going to be? It's going to be 16 multiplied by. It's going to be 16 multiplied by what? Multiplied by the price of Dentro that we established. It was 4.5. So how much is it actually going to be? We need to establish. Yeah, so 4.5 into 16. 4.5 into 16. So this is actually going to be 72. I repeat, this is going to be what? 72. Now, if I talk about it, what happens is you will end up getting the gain or loss. So what do we need to do? We need to now establish this fair value. We need to now establish this market value. I repeat, what do we need to do? We need to establish this market value. That what is this market value all about? Okay, Edna Fadero, I'm actually referring to this question. The examiner is asking that these are the 3 methods that we adopted. So I'm actually referring to the method referred in the question, not the actual valuation methods. So how would you know about the market value of the bond? Let's try to understand. It says Sigra's non-current liability include a 6% bond. You have a 6% bond. You have a 6% bond which is redeemable in 3 years time at par value, which is currently trading at 104. Now, what do we need to do? There's something that you need to understand, and that is basically when you calculate the value of a bond, the value of a bond is present value of future cash flow. The value of a bond is the present value of future cash flow discounted using market rate of interest. The value of a bond is the present value of future cash flow discounted using market rate of interest. What is it going to be? It's actually going to be termed as the value of a bond is the present value of the future cash flow discounted using market rate of interest. Now, what is the market rate of interest? What is the market rate of interest? This market rate of interest is not given to us in the question. So what we would have to do is that we have to establish it. We have to establish it using the concept of bond yield. How would I establish it? I'm being given this bond. I'm being given this bond and I can use this bond to establish it. It's going to be here. Cash flow, discount factor, present value, discount factor, present value. You need to use the IRR. How would you do it? You would say time period 0, it's going to be 104. Time period 1 till time period 1 till time period 3. Time period 1 till time period 3. There's going to be a 6% interest, which is going to be 6. At time period 3, there's going to be 100. When we are calculating the IRR, I repeat, whenever we are calculating the IRR, so in order to calculate the IRR, what you actually need to do is that you need to use the discount rate. You need to use the discount rate on your own. So I'm using this 10% as a discount rate on my own. I'm repeating, I'm using 10% as a discount rate on my own. So if I'm using this 10% as a discount rate, 104. So 14.06 is what it is. Now the next thing that I'm going to do is I'll be using this 2%. So this is going to be what? 104. This is going to be what? This is going to be 2.88. This is going to be 2.883. Multiply by 6 gives you 17.3. And then what happens is, so this is actually going to be 7.53. Now what do we need to do? What do we need to do? This is something that you need to understand. Okay, you want to, let's try to understand. Whenever you are valuing a bond, the value of a bond is present value of future cash flow discounted using market rate of interest. But I'm not calculating the value of bond here. I'm actually calculating the bond yield. I'm calculating the return on a bond. The bond yield is calculated using IRR. For us to calculate IRR, you need to start from time zero. You calculate the IRR from the perspective of an investor. Think about an investor. He's investing 104 right now. Time period 1, time period 2, time period 3, he'll get 6 rupees return. Time period 3, there's going to be 100 return. So what is actually going to happen is, if I talk about this, resultingly what is going to happen? You would say 2% plus this 7.53 divided by 7.53 minus gives you plus into 10% minus 2%. So resultingly what happens is, if I try to calculate the IRR using all this method, okay, approximately 4.8% is what the IRR is. Approximately 4.8% is what the IRR is. So if you try to calculate IRR, it's going to be low. Can you just recalculate? Kudazanai, can you just recalculate, please? Okay, so we have got multiple people confirming it to be 4.8%. I repeat, we have got multiple people confirming it to be 4.8%. Now, let's move a bit forward. Let's discuss further. The next thing is, what do we now need to do? The value of a bond is the present value of future cash flow discounted using market rate of interest. So what are you actually going to do? You're going to say year cash flow discount factor present value. What are you going to do? You're going to say year cash flow discount factor present value. Now this is a 2% bond which we need to now value, the bond that we are giving. So the bond that we are giving, it will have time period 1 till time period 3. The interest is going to be a cash flow. 2% into 100 gives you 2. And then this bond, which is at time period 3, since it's expected to be redeemed at par, 4.8% is what the discount rate is going to be. So if 4.8% is going to be the discount rate, what are you going to do? You're going to calculate this like, so this is going to be 0.869. And this is going to be 2.733. So resultingly what happens is 5.47 plus 86.9, you will end up getting 92.37 as the value of this company. What are you going to end up getting? 92.37 as the value of the bond that you have issued. Now, if any one of you is having a problem that what exactly am I up to and how exactly am I calculating, so let me guide you people. What am I doing? I'm saying that we have issued one bond for every 16 shares in Dentro that we have acquired. So what do we need to do? We need to establish the value of this bond. How would we establish it? So value of a bond is present value of future cash flows discounted using market rate of interest. How do we establish the market rate of interest? It wasn't given in the question. But what we were being provided was the information about one of the bonds that the company had issued. So what we did was we calculated the IRR of that bond. What did we do? We calculated the IRR of that bond, and when we calculated the IRR of that bond, the IRR of the bond turned out to be 4.8%. The IRR is a reasonable approximation of the interest rate that is prevailing in the market. I repeat, this IRR is a reasonable approximation of the discount rate which is prevalent in the market. Now, what am I doing now? The next thing that I'm going to do is that I'm going to be actually discounting the cash flows. I'm going to be actually discounting the cash flows using this 4.8% of the discount rate. I'm actually going to be discounting the cash flows using 4.8% discount rate. So when I do it, it's 92.37. And what am I actually going to do? I'm going to do it this way. 92.37 is what it is. 92.37 is what it is. So it's actually going to be what? It's going to be what? 92.37. You would do this 92.37 less the 72 gives you 20.37. That's what the gain is. Now, if you want to convert this into the percentage gain, it's going to be 20.37 divided by 72. 28.3% is what the gain is going to be. I repeat, 28.3% is what the percentage gain is going to be. Now, what are you going to do? So the question's requirement was The question's requirement was estimate the percentage gain on Dendro company's share under each of the above three payment methods. Comment on the answers obtained. So we have estimated the percentage gain on each of the Dendro company's shares. That means if the Dendro company people are selling their shares, what is the percentage gain that they are getting? So we have calculated these three percentages. One of them was, this was only 11%. The second method, we got 37.4% or 5%. And the third method, we ended up getting 28.3%. So resultingly, what happens is this is what you are going to end up getting. This is what you are going to end up getting. Are you all okay with this? Anyone having any questions, please? Yeah, anyone having any questions on this, please? Okay, great enough. Now, so we are done with this question, the name of which was Sigra Company.